Hi. Okay, so today will be our weekly review, and if we take a look at what happened, this is my trades for this week. If I could have your attention towards this chart, I'm gonna put a picture on the video as well. This would be the trades for this week. I took in around 7 trades, and if you could look at the profit and loss towards the right, we actually made a lot decent profits, but then the losses also managed to match up the all the profits. So we're gonna dive into why that happened today, this week, and how we can further improve the next time. Let's begin. All right, so let's jump straight into the charts. I would have to sometimes refer back to the different charts and the charts, these 3 charts, and this Excel table to guide my analysis. So let's go for the US dollar, Canadian dollar right now. US dollar, Canadian dollar. We had a really good setup on the, let me see, 1.32974, 1.32974. Um, 974 is what up here. So what really happened was on the 10th, right here, we had this really good volume accumulation level. So if I had to draw, oh, and by the way, these blue lines are lines that were traded levels. Red lines are levels that are still ongoing, and they would have a potential trade. So from this chart, what we could see is that there's a strong volume accumulation at this level right here. And so what happened was that as prices touched this level, I got in an entry right here, and generally I placed my stop loss. Um, Generally I place my stop loss. Ooh, when you switch the time frame, you switch everything. Okay, generally I place my stop loss when this happened right here on the 5-minute chart, but I realized that on the 5-minute chart it gets too the price action gets too tight, and I often get stopped out before the prices went back up. So if you could have, I could have your attention right here. Oh, okay, here we go. As you can see, I should have placed my stop loss right here on this level, but then once I placed it 1 pip away from this reaction level, prices already tested on the second try, and I got stopped out of this trade with a very small loss. But then later onwards, price went all the way up. So from this trade, I realized that instead of looking at a 5-minute chart, I should look at it from a 15-minute time frame. This will give me a longer perspective as to what is happening with the trade, and how it will be easier for me to manage my losses. So in this case, since I'm looking at the 15 minutes chart, I would have placed my stop loss 1 pip away from 1.3289. So this will be 1.32889. Yep, somewhere here. Now price would barely test my level before shooting back up, and so it would be a little tight, but much better and much more. It's just generally a better confirmation for a particular trade. Now, I got stopped out at this level, but prices went back up. It would have been a potential profit, but since that happened, so we can't really do anything about it. Next one, let's see. 18. So next one would be 1 second. Okay, this will be Australian US dollar. Australian US dollar. 67174. 67174. Alright, so it was a level right here that was previously traded. So let's go on. This is the lower level. So right here, you see prices. The red line wasn't drawn at that time, but you see this blue line. When price just touched this level, it shot all the way down from 17 to 0.7. So that's like a perfect 10 pip take profit. The reason why we took this trade was because previously there was really strong volume accumulation right there, right here, exactly right here. And this volume accumulation is where institutions were selling their positions because of the aggressive sell-off after the consolidation. And so we understand that we want to draw and find out which level has the greatest amount of volume and entry, and this blue line was that level. So we pinpointed this blue line, and as prices went back up and touched this level, it respected this level and acted as a very strong resistance and pushed the price down by more than 20 pips. So it was a great trade. I made I think I made $200. Yeah, I made $206 from this trade. So it was a great trade, and it was something that was worthwhile. I was really happy that I made this trade. It was tough, but it was still really worth it. Okay, let's see. I just need to find that original level right here. Yep, delete that. Makes it easier for analysis. Okay, next one. Let's take a look at US dollar Canadian dollar again at 1.32437. 1.32437. So what happened to this level? What did I do right here? So if I could direct your attention to the top of this chart, we see a really strong sideways consolidation right here, and then two really aggressive 16-minute candle in a 2-hour time period just shot all the way up, right? This goes to show that there are really strong buyers, and these aren't pushed by normal retailers like you and I. They're pushed by institutions. And if they are managing to push prices up, they're definitely going to be looking for profits in some sort of way. And the sideways consolidation gives them access to such profits because they're getting into their position without affecting the market price. And once they've decided that they've gotten in their positions at a suitable amount, they would use the rest to push the prices up and make a profit on all their previous entries. So we believe that there are a lot of buying opportunities right at this level, and when prices come back to this level in a matter of days or months, in this case it was 7 days, when price touched this level, it's going to rebound because these institutions will be protecting their levels. So let's look at the detailed chart. If we look right here, which is a zoom in version, prices came down, shot past slightly by around 7 pips. This was the perfect place to draw my stop loss, which was one pip away from the reaction, and then shot back up by more than 10 pips. So it was a plus and a profit again for me, but due to the position sizing, we managed to only take home $160. So it was a really good trade, and I'm not regretting it. Next one, Australian US dollar. Okay, we see the Australian US dollar right here. It was a trade that was taken quite some time ago. Right, okay, so why did I take this trade? But why did I take this trade? Well, I took this trade because there was a really strong consolidation right here. Same analogy that causes the price push down. Institutions who are selling at this level want to protect their interests and prevent the prices from going up. So when the chart and the price hit this level again, they would want to protect their positions by putting more sell orders, and causes the price to go back down. And we made a substantial profit as well, this time at $205. So it was a great trade. Recently I was in a rut. Started with $7,000 and I lost 300, but those three trades just managed to push my equity level at an all-time high. But what happened the next few days was sloppiness and chaos, which caused me to go back to just a little bit higher than my original level from this week. So to take a look at my overall account, I'm still down $123 from my 7,000 initial investments, but I believe that we're gonna get back up slowly and steadily. It's my first time trying trading with real money, and it's been 1.5 months, and I know that there's a lot of adjustments into this game, into this process. So naturally it would take some time to really get used to it. So I'm still documenting everything just for the record. Alright, so let's check out USD Swiss franc, where we took a loss of $109. USD Swiss franc, let's see. Alright, so USD Swiss franc, we took this trade. What did we take it? 67. I think we took it right here, didn't we? 12, right? Took it around to 12. Yep, this trade right here. How did I usually write notes? Not the answer with 30-minute candle. Yeah, so this happened. Alright, so okay, so this is what happened. Prices were in a trend setup. We identified this level as a really strong level, and when the price came back down, touched this level, and made a confirmation candle, I saw this as a really strong reaction point, so I put my stop loss 1 pip away from it, which is at a level of 97.63. But as you can see, subsequently prices went back and touched this level, and I got out the loss of $109. This is what happened, and later onwards prices shot up. So there are already 2 losses on my side that was caused by the stop loss adjustment, and so I'm still trying to work on it and how to see if I can perform better and do better. But according to my analysis, it might be even better to have a 30-minute confirmation instead of a what do you call it? 30-minute confirmation instead of a 15-minute confirmation. You see, if I took all the trades perfectly, I would have made it would have been an 80% win rate. But I tried to adjust my stop loss too early and caused the prices to just turn away, and so I'm going to be looking into it, and maybe and most probably I wouldn't be using the 15-minute time frame. I feel as though the 15 minutes is a zoomed in version of the 30 minutes, but it's just too risky. My mentor Trader Dale doesn't trade like this. Instead, he keeps his stop loss at 10 pips, and when price moves by 70%, which is 7 pips, he then moves his stop loss away. But I just felt this as more risky. Even though the win rate is high, I just also want to make sure that I have an asymmetrical win-loss ratio. And so from now on, this was at 67, this is at 60. So I think I'm going to be using the 30-minute confirmation candle. So when I see a confirmation candle, this candle right here, I would have placed my stop loss 1 pip away. Confirmation candle is when the candle, the close of the candle for a buy, in this case a buy, is greater than the close of the other candle, and the close of the candle is 1/3 within 1/3 of the total candlestick range. So it's on top of the first 1/3 level. So since it's right here, I would consider this as a confirmation candle, signifying a change in momentum. Next one, the biggest loss. British pound, US dollar. Okay, British pound, US dollar. Actually took a loss right here. There was if we look over the past, price action, there was a level right here and it shot back down. And so based on our logic, when prices come back to this level, it would go down, right? And it's true, prices went down. However, the issue is that the British pound is extremely volatile. You see other pairs, they just break out of the price by a few pips and then just come back down. But look at this. It started at 30.52 and then 30.69. That's a 17 pip movement. And this is absolutely crazy because not a lot of prices and price action does that. And so it's just a really, really tough way for people to trade the British pound. And oftentimes it is advised not to trade the British pound. However, I still decided to do that because I want to challenge myself. Until I realized that really day trading the British pound isn't a good option. And so we're going to, from now on, not trade the British pound, US dollar. Instead, we're just going to pay attention to it. We're not really going to trade it because it would really affect the risks by it really took the risks on my side, and so I wouldn't be trading this from now on. All right, last one would be USD Swiss franc again. 0.98 USD Swiss franc. All right here. So this was a trade right here, and there was a really, really old level. I mean, if we look and scroll through, I wasn't actually supposed to trade this level, but I thought this was a really, really strong level, and it was, you see, December 27th. We waited for goddamn almost 2 months time for this level to come back. My mentor didn't trade it, and he was right because it was just a little too old, and prices just went all the way up without me, and I took a really bad loss. There was a confirmation candle right here, so I placed my stop loss 1 pip away from the high, and I got out a little early with a loss, but not a full loss. So I feel as though the 30-minute time frame for stop loss is really effective, and I will try to implement it into my trading. So this is pretty much it. This is the review for this week. It was tough because it's not easy to trade like that, and it's not easy to be vulnerable and show you guys my trades, but I just want to be able to make sure that I am accountable to my words, and I tried my best to show you guys every step of my journey. So this is the end of the trading review. I hope you guys enjoyed it. If you have any comments, questions, please let me know, and please subscribe to my channel, like this video, and I hope to see you guys soon.